Very good afternoon to all the participants who have logged into this webinar. So today we have a session on the topic of Indian banking, growing sector on a digital accelerator. So that also happens to be the tagline of our fund, the HDFC Banking and Financial Services Fund. So with me is Anand Laddha, who is the fund manager of the same of that scheme. So along with me is also Siddharth, who is the product specialist for this strategy, who will help me moderate this session. Before I hand it over to Anand, I just want to set a brief background. So as you hear about the topic, it's growing sector on a digital accelerator. I mean, banking is one of the most important sectors that are there in the economy as well as in the stock market. It is also the largest sector in the Nifty index itself, or the stock market. From that itself, we know how critical this sector is there for the overall economy. And it also happens to be a big investment opportunity from a long term perspective. Uh, this is not a new sector. Banking is not a new sector. It's been there for a long period of time. I mean, banks have been in existence even before, uh, uh, I mean, the modern stock markets came into the picture. I mean, banks have been there forever. However, a lot of things have changed, especially right now. We are in the middle of a huge transformation. That's why this tagline has got its part called digital accelerator. There is a acceleration that is happening because of the digital move that we are seeing all around us. Um, why there is a transformation? I mean, there is the traditional banking services. We used to go to the bank branch and do our things. I mean, get our things done, and we used to do banking like that. I mean, few years back, maybe a couple of decades back, the way we bank changed. I mean, we used to do most of our things with net banking, etc. But that has also become now. I mean, more things have happened from a digital standpoint. Now, the reach of banks to the length and breadth of this country has magnified in a big way. We all know, everybody, mostly everyone has a mobile phone with good enough data or fast internet, to put it simple. Uh, then there is this bank account kind of revolution. I mean, the Jandan and all that stuff that happened over the past a few years has made it possible for bank accounts or banking services and allied financial services within the reach of the common people. Then there is the identification, Aadhaar linked identification, and KYC and all has been made very easy. So this is what we call the jam trinity: Jandan, Aadhaar, and mobile revolution that has happened. Now, as a byproduct, what has happened is that the reach of banking products, I mean, be it to take a loan or start an insurance policy, investment into a mutual fund scheme, or deal with any capital market products, for an average Indian, it has become much more easy, and that is a big business opportunity for banks and allied businesses that are there, which is the investment universe for our product also. So all is looking good from a sectoral perspective. Banks have also come out of this difficult times from the NPA related issues, etc., that was there a few years back. The overall industry is, from a balance sheet perspective, much more cleaner, and looking to grow in the next leg of uh, maybe next decade to come. So it's a growing sector. There is digital acceleration. But what about the valuation? I mean, is it good enough, attractive enough investment opportunity? I mean, today in everybody's mind, I'm sure there is a question: are the markets expensive, or is it overvalued? Is it a good time to invest? Is a question that everyone asks. What about this sector? In fact, as part of the invite itself, I mean, 4 points that we mentioned in the invite of for today's session. we mentioned that the valuations are below long-term averages. That is one key part we'll request Anand to discuss in greater detail. So, I think I've given a fair enough background to what we expect from this session. Anand has been managing this fund for nearly 2 years now. Anand has been an analyst with us tracking the banking and financial services. So he has also been the fund manager of this fund. So without taking more time on this, I'll hand over the floor to Anand uh, to discuss this product in greater detail. And we'll also have a Q&A session at the end of Anand's initial remarks. Over to you.
Hi, good evening to everyone. I'm just sharing a presentation screen.
The screen is not. Should I? Okay.
Just so I can Ram, I'm just doing the sharing the screen.
Yeah. If it's not happening, do let me know. I can also try and share it. Yeah, we can see the slides. Yeah, go ahead.
Okay. So, hi, good evening to everyone. So this is an old sector and a darling sector of the market. So I don't want to spend a lot of time on the presentation. Today we carry a very short and crisp presentation of just 10 slides. I'll run to it very quickly, highlighting why to invest in this sector, why we still like the sector, and the fact that the sector has also underperformed the broader market. The theme in India, so India, if you say, look at India is in a very sweet spot. It's a great market to invest, lot of buoyancy and lot of optimism right now at this moment of time as I speak. If you look at BFSI as a sector, the sector has grown faster than the GDP. So generally, the investment theme for any sector, for any market is look at sector, look at stock, which has the ability to grow faster than the GDP is a sector to invest. BFSI is a sector which has not only grown faster than the GDP in last 2-3 decades, there is enough opportunity potential for it to grow in the future as well. If you look at each of the element of the BFSI sector, be it banks, loan book, NBFCs, mutual fund, exchanges, all other subsector of the BFSI has grown faster than the GDP in last 2 decades and will continue to grow. This is this is a fact because we still have very low penetration. And if you look at our penetration of financial services as compared to a developed market like US, it's still low. I believe this is a very common presentation. You could have seen this presentation by almost all the fund managers, uh, uh, all the sector analysts, all. So India is in a very sweet spot, and the penetration not only of the BFSI of all sector in India is quite low. So generally, this is a very common theme when everyone say. So I'm just wanted to highlight ki when to invest in a sector and why we are emphasizing. Uh, the only reason I'm emphasizing at this moment of time is the fact that this sector today is now trading below long-term averages. Generally, one should invest in any sector when it's trading below long-term averages because the maximum money or the potential to make higher money returns is only available when a sector or a stock trades below its long-term averages. Right now, BFSI sector is passing through that phase. The sector has done very well. The earning growth has been very well. The sector balance sheet, both banks balance sheet, corporate India balance sheet are in very good shape. Despite that, the sector has underperformed the broader market due to very sector-specific, company-specific issues, and which has resulted in the overall sector giving return lower than the Nifty or the broader market. In this slide, if you look at the lower presentation, it shows that the sector has underperformed even the broader Nifty. So to put in context, to think whenever an investor invests in any sector which is trading below long-term averages, the probability of going wrong is the lowest. In fact, the probability of making money is the highest when you're investing in a sector which is trading below long-term averages. BFSI today is moving through that phases. while the focus today of the market is what's happening in the next 3 months, next quarter, next 6 months. At this moment of time, as I speak, if you ask me what is the trigger for next 1 month, next 3 months, there is no major trigger. But this is a time when the sector is consolidating. One should look at to invest, and one should take a little longer view, 1 to 2 year, to see where you can see a maximum upside. As an analyst, as a fund manager, I look at not only the BFSI multiple, I look at different sector multiple. And I look at today, the sector is trading below even the Nifty multiple. Today, Nifty is trading at 17, 18 P multiple FY26. Banks are trading at 12 to 13 P multiple FY26. It is trading at lower price to book value. And if you look at the earning growth in this chart, the earning growth is still higher than the Nifty 50. If you look at within the BFSI space, we like larger bank, which have underperformed the broader market. If you look at to give some color, a few year back, none of the investor wanted to invest in public sector enterprises. If you ask anyone to invest in public sector enterprises 3 year back, everyone would have a very clear answer कि पब्लिक सेक्टर बैंक में किसी का पैसा नहीं बनेगा. पब्लिक सेक्टर बैंक बोलो या पब्लिक सेक्टर एंटरप्राइजेस बोलो. And today, when we speak, the maximum momentum is seen in public enterprises. So momentum has brought in a belief that one can make money in public enterprises. Today, as I speak, this momentum is missing in the BFSI space. The momentum is less, and therefore the belief that the sector will outperform the broader market is lower. This is the classic time to invest. This is the time where there is a lot of disbelief in the sector. This is the time to invest because it is trading below long-term averages. To give some color to everyone, uh, today if you look at some of the stock like power stock, or to get an example like NTPC, utility stock doing 13-14% ROE, trades at 2 times price to book value. Some of the public sector enterprises, NBFC stock trading at 2 times, 3 times price to book value. But if you look at the banking, all the large bank, be it PSU large bank, be it private sector large bank, they all are trading at 10 to 11 P multiple, less than 2 times price to book multiple on FY26, with potential and ability to generate higher ROE and to generate higher return, higher profitability for a pretty longer period of time, which is 3 to 5 year period of time. So generally, when a sector trades below long-term multiple, when there is loss of momentum, and when there is higher disbelief, that is a time when you invest. That is a time to invest, and that is the time when you make maximum money. At this multiple, the downside risk is bare minimum. And which is what, when we say from a risk reward perspective, the downside is lower, the upside potential are higher. While as an analyst, as a fund manager, we are not being advised to give to give return target as such. But generally, when a cycle start, or when a sector start doing very well, when a sector is below average multiple, the opportunity to take money is very large. I just had example of last cycle, when that was a time when the BFSI sector outperformed all major market. That was a time when the sector has come out of the cycle and the earning momentum was very strong. This time, as we speak, while asset quality challenges are behind, we are not in that cycle. We see very benign asset quality, but we are into a second phase of the cycle. From there on, we believe, I believe that from here on, the opportunity to make money in the sector is very large. So just wanted to conclude that we are, as an economy, we are into a very good shape. Next 5 years for India are going to be very great. We are moving from a 3.7 trillion GDP to a 6 trillion GDP in next 5 years. Financial sector penetration is still very low in India and unlikely to continue to grow. Technology and digitization are making BFSI very easy and are able to reach every broad, uh, each and every sector, each and every penetration of it is increasing. Corporate stresses behind profitability of the BFSI stock, be it public sector enterprises, be it private, be it NBFC, all are reporting very strong profitability, very strong ROE. And believe me, this is a sector which is well regulated. Our regulation are significantly better than US regulation. Our regulator in all the sector, be it IRDA, be it SEBI, be it RBI, had done significantly well to regulate this sector, and therefore the regulatory risk is quite low in this sector, because it is very regulated sector. The ability to have a fraud in the sector is significantly lower. And lastly, the valuation are below long-term averages. This is the time to invest in the sector. This is the time when the probability of losing money is lowest and the probability of making money is significantly higher. Today, there is a lot of disbelief in larger bank in terms of their ability to grow. Near term, 3 months trigger or a 2 month trigger are lesser, but however, outlook for 1 to 2 years are significantly better. So anyone has a view of more than a 1 year or 2 year, this is the sector to be in. From here on, if you look at the downside risk is very low. Hi Ram, I'll stop here. I'd emphasize my point very well.
Thanks, Anand. Thanks. It's been a pleasure hearing from you. I mean, comprehensively summarized the whole thing finally. So thanks a lot. So thanks a lot for the audience who have joined. We can wind up. Thanks, Siddharth. As well.
Thanks.
Thank you.
Thank
very
you all.
much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.